And amid this global, risk of rising bond yields, fears of a yen carry trade unwind, and also profit booking across asset classes, commodities haven't been, spared either. Silver has seen a sharp crack there. It is down 3.5% in a single session, which is the biggest intraday fall in a month, slipping below, $62 an ounce. Even as gold stayed firm above the $4,300 on the geopolitical tension front. But to understand what's really driving this divergence and whether this is a temporary correction or a deeper shift, and what the investors should do next, let's bring in Manav Modi, Analyst, Precious Metals Research at Motilal Oswal Financial Services. Welcome to the show, Manav.
Hi, thank you. Thank you for having me.
Yes. So, Manav, markets have cracked globally after the rising of expectations of Bank of Japan's rate hike on December 19th. And this is reviving fears of a yen carry trade unwind. So, against this backdrop, silver has also fallen sharply. It is down 3.5%, which is the biggest intraday drop, in a month. And it's slipping below $62. So, more about the trigger. What do you make of it, of this recent rally?
Yeah, I think definitely silver has been the talk of the town since the start of this year. It caught up late with gold. Gold was in the highlands since the start. We were about 60% for gold. Now silver is at 120% YTD gains. So I think definitely any asset or any commodity giving you a 120% gain has to retrace a bit, has to, slide down a bit. Otherwise, when we see a bigger momentum, a one-way rally has a one-way fall as well. So definitely there were a couple of factors we were looking at. We have the industrial demand where we see copper, zinc, aluminum also keeping up its pace, sharp rally there. Investor demand also surged very high where we see ETF flow. Even on the domestic front, the AUMs have been increasing. Also, if we see the iShares, the inflows since the start of December has been absolutely significant. Where we talk about the safe haven buying as well, even that front has been very significant in terms of the geopolitical tension and uncertainty. So all in all, the factor is still positive. It is still much higher. But how silver was struggling to breach 1 lakh barrier, I think it could struggle to breach the 2 lakh barrier. And eventually, after some consolidation, it could go much higher.
Well, hi Manav, Sharad here. You're speaking about silver itself, and there is another aspect to it. It's just not a precious metal, but it's still having industrial usage as well, and there seems to be a shortage. And just wanted to ask you about the important levels, not like we could say a daily or a weekly setup, but something in the next 6 odd months. Where do we see silver going past that $75 mark, or copper also we are seeing a sustained up move happening because of this supply issues. Both of these categories is something which I have noticed. What would be your important levels if you had to say?
Definitely, I think, see, we have been bullish on silver since past two odd years. Definitely, we started with a 1 lakh target, revising it to 1.5. Now our new fresh targets for a year is about 2.5, so which is close to $77 in a year's one. But I think it could definitely consolidate a bit around these levels, 60 to $58. It might retrace a bit, but then, like I mentioned, the industrial metals are also playing a big part, and copper prices are a big bet for us in the next year as well. It struggled to breach the $10,000 mark on the LME, but I think in a year or so, $13,000 to $15,000 on LME could be on cards for copper. Similarly, for silver, we could see in a 6 months time frame about a 2.3 to 2.5 lakh on MCX and about $75 to $77 on the COMEX front.
Okay, Manav. So thanks for giving us that that estimated figure. But in phases like these, does silver really trade more like a safe haven metal, or does it behave closer to a risk asset? Manav, are you able to hear me? So we were talking about the silver, prices getting down because of Bank of Japan's, expected hike cut that is expected. But we'll get back Manav on it very shortly as to what, it really means. So Manav, are you back with us?
Yeah, I'm sorry for the technical issues. I'm back.
It's
Yeah.
absolutely fine. So, like you were saying, you were giving us those expected figures that silver and other commodities must be reaching. So, I was asking whether in phases like these, does silver really trade more like a safe haven metal, or does it behave closer to a risk asset?
Yeah, I think definitely it's a hybrid metal, but since second half of this year, it has traded more like an industrial metal because there has been a lot of talks about the tariff deal impacting as a critical minerals added by President Trump. Also, the industrial metals with respect to China's growth has been really significant. The GDP numbers have not tanked as many were expecting with terms of the US and also the rate cut expectations. So safe haven buying is one that is supporting, but the rally is more towards the industrial metal. So I think the more rally could be a part of industrial metals because the production, 60% of the production goes for the usage of industrial, demand. So I think definitely copper, zinc, more rally to that will follow the silver's rally.
Okay. And if the yen, carry trade does unwind and global liquidity, tightens, so how vulnerable is silver compared to other asset classes like equities, crypto, or even gold for that matter?
Oh, definitely. I think if you compare gold and silver under the precious metals umbrella, silver is definitely a high beta commodity. So the swings will be much higher. Like you seen on Friday, we saw a sharp rally towards the $2 lakh on the MCX, 2 lakh rupees on the MCX. I'm sorry, and then a swift downfall. So these swings will be very, natural. The volatility will be there. So I would advise a cautious trade definitely, but then because the trend is on the high side, the fundamentals on the high side, some bit of dips could be expected, but volatility would be there. Some cautiousness, and once again, the buying rally should start.
Okay. And, Manav, silver has a strong industrial demand base, solar, EVs, electronics. So does that structural demand actually limit the downside in the corrections like these? Or does financial selling, dominate in the short term as well?
Well, I think definitely demand story has been playing out when you talk about the 5G technology or the solar panel or the EV batteries. That story has been in the market since last couple of years. It is now starting to play out because the supply tightness also has come out very significantly, where the mining shutdowns or the production shutdowns has been there. But like you see in the market, even though it is an equity market or a commodity, I think panic selling leads to a sharp, downfall. But a strong base or support is always maintained when you have a strong demand, given it on a physical side or an ETF or even by a central bank, so as to speak.
Okay. And finally, your one-line strategy, if I may ask you before we wrap up, for, silver right now. So is this like a buy on dips opportunity or a wait and watch phase, or, just the time to stay light until global clarity, improves further?
Oh, well, I think you've given three fantastic options. And I think with the fall, some wait and watch should be there. Let prices settle. But I think it's buy and dips also, because if prices come towards 1,80,000 odd or 1,85,000 on the MCX front, on the rupees front, I think that's once again a buying opportunity. On a staggered basis, you should start accumulating on those dips.
Okay, so on a staggered basis, start accumulating, silver. So that's the word coming in by our expert. Thank you so much, Manav, for being there with us and sharing your insights. Thanks for your time.